Well, there you go. Looks like we topped out on that euro dollar. So I'm trading this new demo because apparently the other company went bankrupt. So that kind of ruined my performance. Well, my performance is locked at a great ending. So this is going to be the new demo. And I've been just kind of not really seriously trading it. So now I'm going to start focusing on scalping at the same time swing trading. So scalping around a position that may be even in a loss to scalp it into profits, but trading so small that it's not going to really matter as far as actual real money losses. As far as pip losses, you could always look at the pip thing and then say, if I was only in 1 million shares of that, or 1 million units of that. Of course, that hindsight, is kind of ridiculous, because unless you built that system, I guess it's kind of, unless you built that whatever it is, no sense to torture yourself. So right now I'm buying at the market very lightly. I bought earlier, but I knew I had a dump because I knew they were going to on the 15-minute time frame. I knew we were at the top of that range, just based on the last visit us up there, just the last time we've been up there. And I've only got a few places to draw a line on a 15, so I just have this double top, became this double top, so this is a triple top from here. But that's about as thin as I want to slice the 15. Now I want to buy down here when it comes down in here. So this is very conservative. I got this set up very conservative. This is going to buy as we sweep down, if we do. But I'm also buying slightly on the clock at the market. So as we come into this window at the bottom of the hour, I'll be buying kind of heavy for scalps because, like I said, if I stack these up, I think this lasts 15 minutes and this lasts a half hour, and then this lasts an hour, and this account is so conservative that I actually have made I don't know how many of these were. Actually, all the trades in here were automated. So whatever the history, I'll put the total history up. Of course, I'm actually starting it on the 23rd of June. So hopefully, I'm actually up $10,000 on it somehow. I guess, I don't know, I threw a bunch of orders in. Some of these, this next one I'm going to put in is something that is kind of a guaranteed moneymaker if the scenario plays out. Not guaranteed moneymaker, but high profitability moneymaker. You can still get stopped out of it. It's a very tight stop. Well, I think I'm at master stop on this. This is my 2-hour order, I think. Now, if I lay this in, this is only one case, and I'm going to have to check the commissions on this broker because the other one was killing me. Maybe that's why they went bankrupt. So if I lay in this big bed like this, and in this one I'm running 100 pips between each horizontal. So we fell down about 200 pips in 2 days. And this is just dumb order placement trading. This has nothing to do with any kind of Fibonacci. It's just dumb stuff that you kind of just have to figure that this breakout, when we were supposed to break out that high that day and just go screaming. So here was the first attempt, right? That's the actual high of that day. So it's the internal high. It was just a spike. And I remember when that spike happened because I was sitting at the platform, and you got to realize this 1 hour spike, this wick, that didn't take, but it took about 3 seconds for about 1 minute. No, I'd say about 10 seconds for that to sweep up, and then 10 seconds it ripped back. So I think all of a half a minute for this spike. But interestingly, that was where you would have a sell pending based on this cluster of tops and bottoms, mountains and valleys, what have you. And then I got this surveyor friend trying to get to trade this thing, so I'm trying to survey the market for him. But amazingly, this cut through here, even if you had a sell stop here, which I'm sure a lot of people did on the inside of that day, we just crushed through it. And then there's the last chance to be even, and a lot of people psychologically want to get even with them. They want to be even with the market. They don't want to be in a loss as far as losing to the like if they're down in the account and they're like, oh my God, I want to preserve equity. That's why the market actually does that move, because the people that realize they're wrong, that's as good as it gets, that next price. So this was about as good as it could get over the next hour, right? So everybody bailed, and we never even made it to the bet close here. So actually, the stop guys were already stacking up their 1 hour stops here. So if you're going to trade both styles, I think the ultimate is to be able to trade stop entry, small, and limit entry, small, and market entry, small. Spread yourself over 3 styles of entry evenly. If you can't do that, you're just never going to make a killing. Because you can be able to make 500% of your money in these markets. Come on, right? Because this is the 1 hour chart. If you have multiple time frames running, this is the 1 hour, here's the daily, and here another. If you're going to zoom out to the daily and look at this, the way this didn't play out on that stop, but you know that if you drill down on this wick and see, it only spent about a half hour attempting to follow through, and it could never get past the, that's right up here, and it was right at the 100 handle too, so. Right there at 114. 114, people are like, I'm out, see you, bye. And we went on a 200 pip discount. So now I'm looking for retrace tonight. But I'm going to try to exploit. I'm trying to take advantage of and make money off of each wave as we come back. So if I run this on the 1 hour, and I got the 1 hour wave I'm trading, and I'm going to have to enter and exit, say, on the 15 or the 5, and trade it from a scalping standpoint, because we all know that when the next session opens, anything could happen. We could really go off the rails. So this is actually 4-to-1 ratio here, a 15 with a 1 hour, and if I zoom out here, I can get more data in there, but I don't want to go past too much. This is at 100 pips a day. So 100 pips a day velocity, money velocity. You're gonna it's gonna look like this to you. So in a perfect world, it's your rate of descent at 100 pips a day. Now notice the rollover is at a 45-degree angle, or it's like this anyways, I guess. But if you're gonna go box to box, keeping this 100 pip a day idea and your channels at 100 pips a day, you got this rollover. Even the wick traders could get in on that one, right? It's like wick to wick. And so going to the 15-minute, it's kind of like the exit's got to be here, right? For the scalpers. This last known top that became a bottom that failed. And for the RSI traders on the 15, it's going to look like this. You're drawing your breakout. Your edges here, you're going to look to break that, and then you've got your first failed reversal here. That's why that sliced through pretty hard. That was supposed to be your entry to buy, but see how they just came up and it just stalled out in the most dumb manner possible up there. And then here we are caught in this chatter zone till London opens, but this is definitely the ultimate price to take out, is this 1176 area, 1180. That's going to be the 4 pip crush your bones, but I guess I could argue for this being a terrible reversal because it doesn't qualify, but it's certainly oversold. And what I think is, you can always go to the half hour, less signals, less. This one I could actually see the reversal on the half hour. So without breaking a rule, you can just switch time frames, and I could say that's a shallow reversal. This would be my projection for the next, say 4 hours or something. But it only takes you up to a retest of the high. It's not a big, not an unusual situation for this thing to just be like up and down, up and down. But when you go into this session here, if you can change modes into being a chop trader here, and then when the trend kicks in, you're going to use stop orders. say you figure, is this marching up? I guess you're always using stop orders. It's just when to drop them. Like I could drop a buy stop here and justify it because if I went to the 5-minute fractal, you know, I could say, well, if we take out that top, but I wouldn't put a lot of buy stops in, and that'd give the buy stops a big take profit and a kind of a decent, maybe 20 pip stop and a 60 pip take profit, because those are the in the end orders. Like in the end, we're going there. But in the meantime, I think I want to scalp a little bit. A third of my capital goes into scalping, a third goes into the stop entries, and a third goes into these plunge situations. Like we just had this big plunge here, and if you're loaded here, you're already in for the 50 pip retrace to here, right? So your exit's going to be here, obviously. You have no choice. If you're going to stick to the rules of bottoms become tops and tops become bottoms, support becomes resistance, you know, oldest thing in the book. But of course, for the impatient person, we can't wait for this stuff to happen. And here's another possible resistance coming back up to the round. It coincides with this. So if we can start to build a structure around past behavior, you know, and this is what we're really doing here. And to my surveyor buddy, or my it comes from the world of linear world and expects things to make sense. This is about as much sense as I can make of Forex. Is that we're always overshooting the runway, you know. It's like you know, first you want to dress up, you know, you want to dress up for the night as a chick. Next thing you know, you've gone overshot the runway, right? And you totally edited yourself down to painted yourself into a corner like these bozos. They keep printing money, thinking they can print their way to prosperity, right? But this is my only answer for the entries and how to make it make sense. Another thing you could do is put this node on the end of this wave, and now you got a 50%. You copy this in the future, so that puts you about here. We'll offset it a little bit so we can tell that we have a break there. And then you have to, I guess, figure how many pips a day, right? 100 pips a day velocity doesn't mean that you have to kind of catch, like you'd have to take this and treat it like a moving average and bring it over here. So you go for the center of that. And cue that up to the double top in there. If anybody can see this thing. That's why I zoom in. See the double top? And it's approximately 100 pip velocity on that. You come off of this. This is going to be the next selling pressure zone on the way back, right? As we come up into, copy this line over to the last known swing low. So if you can see this thing climbing through the web here, like a spider web, and of course I'm getting out right here at the top of this wick, right? Because just money management, right? We could blow through it, but there's scalps already in here, I hope. These are mostly scalps I'm running on the demo right now. Just because I didn't put a big fat order in here to get in on something. So even I got long on scalps here, should have had orders, should have written scripts that take advantage of this 50 pip bounce, right? Or at least have a buy limit here at the swing low of the day in case we went down there one more time. Okay, 9:30 is coming. I'm expecting a rally here, and hopefully I'm scalping out of something, and then I'm going to get situated for another possible pullback. And here's the target on the half hour. We might reach target before that time is up. But if you are trading it from that standpoint, and here I could make the argument that it should have had a buy limit here because this soft bottom here is very important for a pivot. Half hour is probably a decent lifestyle, right? I mean, how much work does a half hour chart take, right? You check it every half hour. So yeah, I'm looking for a retrace. I'm going to be bailing up here. Certainly have to bail up there just logically at 12:38, 12:30ish, right?